All right, welcome back to another episode of Robinhood Portfolio. Right now, the portfolio is up $289, and in the after hours, I am up $1.26. So today was a really good day in the market. The Dow Jones spiked up, I think, 250 points after suffering one of the worst weeks that it has been going through for like maybe the past 3 months or so. Right now, I'm just looking at the markets and I'm evaluating some things. I evaluated some positions. You know, everybody's blowing my phone up. They're texting me. They're like, hey, how you doing? How you feeling? You know, are you selling off, or what are you doing? Or are you making some good trades? Are you buying these dips and this and that? And we're going to get right into it, guys. We're going to jump right into it. But first, there's probably a lot of questions about how these portfolios are looking. A lot of people's portfolios are down thousands and thousands of dollars off this incredible week. There's been a significant drop in the Dow Jones. I think the Dow Jones for the past 2 days, with the exception of today, is probably down about, I would say about 1,800 points, which is an incredible drop for Dow Jones. So pretty much all returns are wiped out. A lot of people freaked out. A lot of people panicked. But I'm gonna talk about what I did as far as me trading and me. Did I sell off? What did I do? Did I sell everything or just wait? We're gonna get right into it. So let's go take a look at the week. The week I'm down $500, which is absolutely the portfolio is absolutely getting destroyed and hit in the mouth. Currently, with that $500 drop, I know the market's kind of spiked back up today. It was worse than that. At one point, I was down $1,200, guys. $1,200 with this Robinhood portfolio. And it's not the fact I freaked out, but I actually got some things. Robinhood portfolio actually opened up some things for me, which I'm also going to talk about. But for the month, I'm down $500. So for the past week, this week alone cost this $500 drop. Like I said, I actually got down all the way down to $1,200. And I actually thought that this market was going to keep going lower. I thought that this was going to go past correction territory and probably go until maybe like around that 15-20% range. But the Dow Jones bounced right back up today. You can see right here, we started off about 15,603. This portfolio actually got up to about $16,000, but then it dropped back down to 15. And then after that, that's when the Dow Jones started falling, and Dow Jones dropped 1,800 points or so. And look at this, guys. It went all the way down to about 14,760. I think that was the lowest point I've seen. Maybe lower than that. But the Dow Jones is starting to recover. This could be a dead cat a dead cow bounce. If you guys don't know what a dead cat bounce is, it's basically picturing you on the top of a giant building and you have a cat, and then you just drop that cat from all the way down from the top of that building, and it's kind of like a stock. The stocks go all the way down, and then when that cat hits the ground, it's gonna bounce as soon as it hits that ground because of the gravity and all the metrics and this and that. But the thing is that they call it a dead cat bounce because it's gonna bounce right back up, and then after that it's gonna fall again. So you guys could, look at what a dead cat bounce is. I think that this might be a dead cat bounce. I'm not really sure. I actually think that for stocks in general, there's a lot of earnings reports coming up, and I think the way those earnings reports are reported is going to really dictate how the market's going to go for these next couple of weeks or so. So the portfolio was doing real good. I was in really major positions here, and all this other stuff. And actually, at one point, I think this portfolio was up a grand total of about $14,000, which is just incredible. But we're gonna see my yearly returns. At least half of my returns were wiped out. This portfolio was up much bigger than that. I think I was up about 13%, and I think it was about 8% correction. So right now I'm down all the way back down to $800. I'm all the way back down to $800. So we can see these little mountains and valleys and of corrections and just bad trading. But we're gonna talk about what's been going on with my portfolio. So what did I do? Did you sell off? Did you short some stocks? Did you just buy some dips and this and that? We're going to talk about why I did the things that I done. We're talking about why I did what I did. So, okay. here we go. So we look at cryptocurrencies. Why do I have cryptocurrencies? Well, I'm going to talk about that after I talk about these stocks. But these are the stocks that are holdings that I have. You're going to see a lot of stuff that's been trimmed back. We see Apple, we see 3M, we see McDonald's, Visa, Boeing, AT&T, and Johnson & Johnson. There's a lot of stuff that were cut back in this portfolio. A lot of positions and money was taken out. Well, not specifically taken out, but a lot of positions were closed. And then you jump back in thinking that you're going to not specifically buy the dip, but buy back stocks at a much lower rate, if that makes any sense. So, I think I had like 10 shares of Apple. I closed that money out. I took some of the profits. It dipped a little bit more. And then after that, I jumped back in. But I didn't jump back in with incredible positions. And the reason why I didn't jump back into incredible positions is because of the valuation of the market right now. I still think stocks are a little bit overvalued. And I want to when I first started the Robinhood Portfolio videos, I was really just buying stuff. I didn't really look at the metrics. I didn't look at the valuations. I was still sort of just learning the market in general. I didn't really just care about what the price was. I just looked at something. I looked at something I wanted. I said, hey, I want that in my portfolio. Let's buy it. So, I looked at stuff like Apple. I looked at stuff like, Johnson & Johnson. I think I had some Boeing in here. I had a lot of good stocks, but I wasn't really looking at the valuations of stocks. I didn't care. I just saw it as a blue chip company, and I just kept thinking they're going to go up and they pay dividends, and, that's all I have to worry about. But, Apple is a good company. They're starting to trend back up a little bit. I think my average cost last time was about $96. I took that. I sold that position off, those 10 shares, and I bought back around 3 shares when Apple took a dip. I'm not really sure when I actually. I think I sold off right around here. I think it was like around October 10. Now at 11, on October 11, the portfolios kept going down and trending much down a lot from the 1,800 point drop. But right here, I think that's when I started closing out positions and opening up other positions that were on sale. So today, we're going to look at Apple. My average cost, I think now is $218. It actually got down to $212. I didn't buy any. I thought it was going to dip more than that. But I thought that if I start a position here, a somewhat small position, there's only 3 shares in this position. So this is not really like a major position. This is just something that can get your feet wet and get to some money out of the market. We don't know. Again, I don't know if this is going to this market's going to keep trending lower, or if it's going to keep going up there based off these earnings reports. But I need to somewhat keep some money on the side on these earnings reports coming up, because stock is going to really jump up or it's going to really jump down based off earnings. And, you want to be ready for a particular stock that I want. Amazon made some good money off them. I jumped in and out of them. But, there's a stock that I want, maybe like a 3M that has a bad earnings, and, the stock goes down lower, maybe up to about 170. That's really pushing it. Maybe like 150 is just crazy. I don't even think it's going to touch 150. But I'm in at $196. So 3M is back. Dividend Aristocrat, I love them. This was in my portfolio in the earlier videos. There was not a major position started with 3. I'm looking at 3M now. This is a good average cost. I probably should have just start a major position right here, but right now, since all these earnings reports are coming up, I need to close out some of these positions. Like, Apple, I closed out that position. I do think they're going to be earnings, but you never know at this rate. Johnson & Johnson, I took the $200. So I think I said it before, I'm not scared to take money. I'm not scared to close out my positions and, move that money somewhere else. Move that money to another stock that's on sale. McDonald's right now, $163. I'm in at $165. I did trim down this McDonald's stock a little bit, but I'm looking at the total return minus $5. This is not a big position, so I'm not really worried about it. I'm really not too much concerned about Robinhood Portfolio at this point in time, because I actually think I have about 10 grand just sitting there waiting for these earnings reports to come out and waiting for some dips to happen. I was really hoping that Walgreens dip today so I can steal them for a discount, maybe like around that $60 discount that they were a couple of weeks ago. That was really nice. But McDonald's, good blue chips. So you guys see my strategy. Even though the portfolio has been sort of shortened back a little bit, and I'm just waiting for the earnings reports to come out so I can buy some more. I'm sitting on $10,000 right now. You guys still see the strategy that I'm doing. I'm holding these nice blue chip stocks. There's only 7 stocks in here, but I like to be around that 10 to 15 stock range. So I'm gonna put some more stocks in here, but I still don't like the valuations of the market. I'm hoping that it goes down just a little bit more. I saw Alibaba; they were down all the way to 138. I was holding out for $120. It didn't happen. That was a real long shot to hold back Alibaba hold back on Alibaba for $120. But Alibaba is starting to spike back up. I don't know about if I'm going to buy it or not because it spiked up a lot now. It's probably too late, and actually it is too late. But I'm not going to buy Alibaba. If it gets back down to about the 130s, I might take another hard look at this. So don't be surprised if you guys see Alibaba back in the portfolio. I'm kind of just sticking with the high yield dividend blue chip stocks. I do put some growers in here like Visa just to kind of balance things out. You guys see stocks like AT&T. As long as I think what AT&T is, as long as they don't cut their dividend, I think this is a good buy. This is definitely a strong buy around 32 or lower. They're just so big. I understand that AT&T, they have a lot of debt. They have a lot of their balance sheet is not as good as Verizon's, but they have so many resources. They're kind of like Disney in a sense where they're buying up all these resources, and they're just a very, very large company that's just going to be around for years to come. And as long as they don't cut that dividend, I think that this is a very safe stock. Low PE ratio. I'm just buying up shares. I might buy another 40 shares of this and get this maybe like up to like a 60 shares or something like that because I really like their dividend. Visa, I kind of regret cutting Visa back because I was already in at a low average cost, but I think Visa is pretty good. I did take the money, so I did take some profits out, but I did leave 3 shares. I bought some more of this. I completely closed on my position with Visa and it got all the way down to like 134 or something like that. But I bought in at 136 again, so I'm back into Visa and I'm getting more money. So. Boeing, I think I had like 3 or 5 shares of Boeing. I was really hoping that this would get down to about 325. It didn't happen. Right now, my average cost is about 357. So, right now, Boeing is just expensive stock. I don't really need to own Boeing, but I do have a strong feeling that they're going to beat this earnings report. They didn't have a good earnings report on the last one, but I think that they're going to have a good earnings report on this one. If it spikes up, I think I'm really considering taking the profits here. Johnson & Johnson, I did take the money with Johnson & Johnson. I made $200 off Johnson & Johnson. Johnson & Johnson's been kind of trending back. I sold it when it was like somewhere up here, and then it kept falling and falling and falling. And I really wanted to buy this dip, but this I don't. The thing with Johnson & Johnson is that I don't like this average cost at all. I think Johnson & Johnson is a buy. $120 or lower, maybe around $128. I think that's a good buy, but this is not a good buy at all. I don't like this buy. I don't even know why I bought Johnson & Johnson. I was looking at other healthcare stocks like PFE. I think this is a good one. This is definitely a good one to hold. They've already been trended up. I like them. I like them more than AbbVie a lot. I think that this is actually a really good dividend stock. I'm not sure why I haven't bought some stocks of this because this is really good. This is a trending up graph, pretty decent. Just a really strong buy. I think I might buy some of this. And you know what? I think I will. I'm gonna sell Johnson & Johnson Monday. I might buy some Pfizer because it's really good stock. But another big reason why I started selling off some of my positions just sitting on cash because I can now trade Bitcoin, guys. I could trade Bitcoin, I could trade Litecoin, Robinhood app. I've been doing some trades with that, just getting in and out. I can do unlimited trades with this, but again, it's very volatile. Bitcoin trades pretty much 24/7, so you basically just sitting there and you're just playing with your phone and you're just selling off the spikes and buying the dips. Like, I bought right here and then I kind of sold off like right around here or something like that. But yeah, I now that Bitcoin and Litecoin is available and Ethereum is available on the Robinhood app, I can do unlimited day trading. I basically have unlimited day trades with this, and I don't have to wait on stocks. So yeah, guys, this is going to look at that's pretty much going to do it my Robinhood portfolio. I'm going to kind of stop doing Robinhood portfolios as much as I'm doing my M1 Finance account, because I'm really focusing more on my M1 Finance account and trying to create a passive income revenue, so to where I can just get paid without having to do anything through monthly dividend stocks. I actually started up another account on my M1 Finance. I have a Roth IRA, and now I have a a cash account. I have an investment cash account with M1 Finance. So I have two portfolios going on over there. As far as all the stocks I get on my M1 Finance are monthly dividend paying. So my goal is just to get paid without even knowing it, and just put it back into my account. That's what I'm trying to do. But yeah, guys. So I have 7 stocks in my portfolio now. I'm probably going to buy some things. I'm looking at is Shell. Shell is starting to trend back. I think I sold around 70. Let's just take a look. When did I sell this? I don't know. Yeah, I sold about 79.9. I bought it when it was around 65. Yeah, I bought it around 65. I sold around 70. So yeah, that was a good trade. But I really like this trade, 3M. I really like that low average cost. I always wanted to do that. But I always want to put 3M back into my portfolio. But yeah, I see what I'm trying to do. The high yielding dividend stocks for the time being. But a lot of stuff got trended back. I'm sitting on a really high buying power. Just to show you guys my buying power, $11,000 of buying power. So you guys, people see it, you're sitting on a lot of cash, but you have to realize that cash is a position, guys. Cash is a position, and I talked about cash advantages in my last video. Sitting on cash, doing nothing, and waiting for a bad pullback. Like there was a bad pullback maybe about 2 days ago when the Dow Jones dipped $18,000, but I couldn't really buy much because I didn't have the money to do it. I mean, I have the money, but I also have bills. I also have a life, so I couldn't just put that money into stocks. But you could always sell off your highest positions. Like I had Apple and I had Johnson & Johnson. I made like $400 off those positions, and then I wait and just put it in the next stock that goes on sale. So you guys see what I'm trying to do. That's pretty much it, guys. There's Robinhood Portfolio. I know that I've been trading Bitcoin, and Bitcoin is really expensive, $6,000. But I mean, trading Litecoin now, so that's another reason why I started trending back my stocks a little bit, because I can trade 24/7 now with this, and I don't have to pay fees like I was doing. I was paying fees on the what's it called? It was that. One of those cash apps or something like that, where you have to pay fees for just to trade Bitcoin. I didn't like that. But on a Robinhood account, there's no fees. You can just trade it, and you can trade in and out. You can get in and out. You don't have to worry about a day trade or worry about your account being $25,000. But you guys see what's going on. $15,000. Like, this was not a good week at all. This was pretty much a wake up call, if you want to call it that. But that's really not bad in the sense that the portfolio kind of sort of recovered after this dip right here. Minus $500. You guys see what's going on, and for the past year, only up $833. So not bad, but again, terrible week. I definitely took it to the jaw there. that's going to do it, guys. I'm going to go on ahead and cut the video. I'm going to start doing more M1 Finance accounts videos and show you what I'm doing over there. I'm going to put $100 into my M1 Finance passive portfolio income for every time I get paid, and I'm going to try to get that up to like maybe about $1,000 of just straight monthly dividend paying stocks. So that I'm going to just really see how that's going to work out, and getting paid every month, or all these monthly dividend stocks are going to start paying. So that's going to do it, guys, and I'll see you next time.